So many people want the housing market to crash, where home prices will drop 20, 30, 40, even 50%. And I get it. You're trying to find an affordable housing option. Two of the claims that a lot of the housing crash bros that have been talking about for the last few years is going to look exactly like it did in 2006, 7, 8, with a wave of foreclosures that were supposed to hit the market. And guess what? In a way, they're kind of right. They said that home builders were going to be dumping their houses at a discounted price. Well, some of that is true. So at the beginning of the pandemic, it was well thought out because so many people had taken the mortgage forbearance that we were going to see a wave of foreclosures that hit the market. And they are dead wrong about that. And we're going to be getting into those numbers a little bit more. But first, let's talk about this article. Not that I think that Yahoo News is the best credible source when it comes to information, but it is an interesting article all the same, because I told you, I've said this in many live streams, that home builders this time, if they're going to be stuck in a bad place, they're going to dump their houses to institutional investors. And not too long ago, Blackstone said they were going to keep another $51 million, or was it billion? I'll have to go look again, off to the side just for this specific situation. Well, if they have a good bunch of them, they just go ahead and call companies like Blackstone, Invitation Homes, Tricon Homes, any of those companies, and say, hey, we got a bundle of houses right here. We'll make a deal with you if you could buy them at this price. Like I said, they've been sitting on the sidelines salivating. They can't wait. And that's exactly what they did. They're going up and buying up these houses, where home builders are saying, okay, we can't sell these houses. We have a bulk of them on our books. We're going to go ahead and sell them to institutional investors to get them off the books. Don't believe me? Just go ahead and do a quick Google search and find numerous articles talking about how institutional investors are buying up whole neighborhoods to do what with these houses? It isn't to resell them. It's not to flip them. It's to rent them out. And like I've said before, they're trying to turn us into a renter's nation. You can make a lot more money from a person, much more than if they were using it on a mortgage to build up their own wealth. And they're trying to convince these kids that this is the right thing to do. It's almost like a moment of despair that they're getting in these kids' heads, because they'll keep saying to them, the thing is that home prices are so high now, you'll never be able to afford it. And I heard my daughter even say this. And here's the thing. Don't let the rhetoric decide your future. My fear of it falling apart like it did in 2008 doesn't seem to be coming to fruition as many people would hope it would be. And it doesn't mean that like it couldn't happen in the future. But for now, there's some things that are probably going to keep the home prices either flat or slightly under where they're at now. One of them being new home builds. There isn't as many. Home builders are smart this time. They've learned their lesson. They didn't build as many houses they did in the last boom, where they would have properties they were sitting on. They saw the writing on the wall. They knew the prices were going up. They were building as many as they could. And when they saw that the interest rates had gone up, they're like, we're just not going to build anymore. And they pulled out. And now they're building in multifamily units. That doesn't mean that they're going to go down 20, 30, 40% like in some places. In some places, it's very possible, especially if you have a lot of new construction in your area and a lot of uncompleted construction in your area, because they're not going to be able to sell all of those houses off to institutional investors. They're still going to have to sell some of them to the public. And this is your time to shine, especially if you've been saving money for a home and looking for something more affordable. The kicker is right now, if you look at the interest rates, you're going to be paying a lot more interest. If you are looking at new construction right now, you may want to see what kind of incentives the builder's offering. In some cases, like this one right here with D.R. Horton, they're offering $8,000 in closing costs. Work with your lender to see if you can use those closing costs to buy down your rate, so you don't have to pay the 7.25% that's being offered right now. This is also a time to ask for any kind of upgrades at no additional charge. And it doesn't hurt to ask them to come down off of their price too. Get it while the getting's good. And I have said this before, and I'm going to say it again. If you are in this position where you're trying to say, well, I'm not sure if I can afford it, but it's possible the interest rates could go down and I could be able to afford this payment, don't do that. That is a very bad thing. I've heard this expression, date the rate, marry the house. That is so stupid, because if you can't afford it now and you're just hoping that interest rates go down in 5 years, that's a really bad plan. And you might be seeing in your Instagram feeds and your Facebook feeds that a lot of more mortgage companies are offering what they call an ARM. That doesn't necessarily mean it's a good thing. Some of you might be old enough to remember what caused the whole debacle of the last housing crash. And some of you may be too young to remember. At the beginning of like the year 2000, a lot of people at that time, my age, were starting their whole new families. And home prices at that time were kind of high and rent prices were very low. So in order to encourage us to get into the American dream, they said, hey, you may not be able to afford this, but we have something something called an interest-only loan. And many of my friends jumped on board and said, oh, this payment is way cheaper than rent. And they ended up getting the house. The thing about it was those payments only lasted for X amount of period of time. Some of them were 3 years, some of them were 5 years, some were 10 years. And they were only paying the interest on that loan and not paying down any principal. So at the end of the 5 years, the hopes was that your house would increase in price so much so that everything that you didn't pay towards the principal or the total cost of your house wouldn't matter because your home had increased in value so much so that you would be able to refinance. Some of my friends were able to do that and got themselves a heck of a deal. And many others did not. And they were giving these loans out to everybody. Anybody and everybody. If you had a breathing and had a pulse and had somewhat of a job, didn't even matter if you worked for yourself, they were writing these loans to people. And then they'd package up all these loans and they give them to banks and sell them as like stocks and securities. And it didn't really work out for them. It was a big mess. If you want to watch the whole thing, go watch The Big Short and you'll understand much better than I explained it. The thing is, an ARM loan is a dangerous loan, especially if you don't know what you're doing. I'm not saying that it's not right for everybody. You need to talk to your lender and ask them about that if that's something that you're interested in. But in a lot of cases, if you don't know what you're doing and you don't have that money saved up and you don't have the finances now and you're trying to get into a house just by getting an ARM loan, you may find yourself in a really bad situation in 5 more years. So thoroughly investigate an ARM loan before you decide to jump into it. It may seem extremely appealing to you now when you see that really low payment, but that could be biting you in the rear end in 5 years from now when it's meant to reset. And who knows what the interest rates could be then. 5 years, it could be at 13%. Who wants to pay that? And then your payments are going to be really, really high. Now let's talk about the builders going into the multifamily units. As you know, across the United States, we have a housing shortage. They say it's between 5 to 7 million homes. It depends on who you talk to. The National Association of Realtors just said it was a hair over 5 million. But the statistic they leave out of that is a little over 5 million affordable homes. We have plenty of houses that are big and expensive and sitting vacant, but there isn't many people that can afford those. We need affordable housing. And it's like the most dirty word in real estate, because if you ever mention that at a town hall meeting, you're going to watch a lot of Karens standing up there going, I don't want it. Affordable housing causes crime. The thing is if you are looking for an affordable rental right now, I know it's been super difficult. And as these home builders got into the multifamily units, they're going to cause rental prices to go down even more, because if you have more supply of rentals on the market, that means that rental prices will come down for you. When will we see that? Well, it depends how quickly they build. And I can honestly say as the economy turns quite a bit, interest rates continue to go up and food costs continues to go up, a lot less people are going to be taking vacations. So the Airbnb business is probably going to be turning those into long-term rentals, which is really good if you're in that rental market and looking for an affordable rental. So now let's talk about foreclosures, because they're up 167%. And if I really wanted to make a clickbaity video, I could just title it that. But 167% right now doesn't mean that it's at pre-pandemic levels. At the beginning of October, lenders started foreclosure process on a total of 67,249 properties across the United States. And that's way up from a year ago, according to a report by the real estate data firm Adam. It's close to the pre-pandemic levels, but it's only 1% up from the previous quarter. So where are the foreclosures that the housing crash bros promised us? Well, people are just selling them. There's no reason for them to go through that foreclosure process. The United States homeowners currently have the most equity that they've ever had in their homes in history right now. Now, I know the big plan for Jerome Powell is to tank the jobs market, so there will be more homes that are coming down in price. For right now, that's all they're going to do is eat into the equity. It doesn't necessarily mean it's going to cause a wave of foreclosures. Now, that all can change the more that the jobs market tanks. And I know that if you're looking for an affordable housing option, you would be looking forward to it, especially if you're trying to find an affordable home. But let me just say this, the foreclosure process takes a long time. So even if somebody was to lose their job today, it would take them years to get to the point where they actually come back on the market. And another thing I do want you to be aware of, there is a different player in the game when it comes to foreclosures. In the last housing crash, a lot of these private equity firms ended up buying up a lot of the foreclosed properties. At the time, it was kind of one of those things they were kind of sketchy about. They weren't sure how it was going to really play out. But then they found out that it was a really great asset for them. This time they know how that poker hand is going to play. So if there is a bank of houses that are going to be coming on the market from a bank, companies like Tricon, Blackstone, Invitation Homes, all of those people are going to be lined up and waiting to grab them again to turn them into rentals. I would definitely keep an eye out on the foreclosures in your area. One of my favorite sites, and I do not get sponsored by them, is HUDhomestore.org. Check them out all the time. They're always putting new foreclosures on the market for you. They're meant for owner occupants instead of investors. They designed the website so the investors cannot bid on them within the first 14 days. It's meant for you as a homeowner to live there. Of course, there are other auction sites that you can look at, but always be very careful about those. But it is a great way to find an affordable housing option. And just know that if your neighbor stops paying their mortgage and they happen to get foreclosed on, it's going to take them a long time before the house ever hits the market again. Some states take a lot longer than others. And I found out New Jersey is one of the #1 states for foreclosures. And I'm not 100% sure why that is. If someone out there could tell me, I'd love to know. But there is other things that I can tell you about the affordability crisis here in the United States, and that's with these videos right here. My name is Kristina Smallhorn, your real estate whisperer, and I tell you all this because good real estate information matters.